Hello everyone, how are you? Welcome to the third day of the webinar, and I am your instructor Rizwan Maniya. So we are beginning the session with the area that we left yesterday, and that is linear programming. So I just mentioned yesterday that linear programming is a technique that we use when there are multiple limiting factors. So when there are multiple limiting factor, we use linear programming. And uh, feasible area. Sorry, I told you that there are more likely chances that the graph will be given to you, and you have to use that. Now I'm quickly moving towards a question that we were solving yesterday, this Kara company question, and I will be explaining you this in a very good style. We did question 21, 22, and 23. Now we are moving towards question number 24. So people were asking me a few questions yesterday about this question 23, that maximum overtime that the company can pay is equals to the shadow price. So yes, the answer is yes. The maximum overtime the company can pay is equal to the shadow price, because shadow price is the additional contribution on if one unit of scarce resource becomes available. So yes. Then the second statement was that the maximum, this is overtime, okay, and this is maximum per hour payment, and this includes the basic wage plus the premium. So if company needs additional hours, so the basic wage was 45, which was given above, and this is the overtime premium, which is equal to shadow price that the management can pay. So yes, you just see here, this is 45 for the labor that is given here. So the maximum that they can pay is 170. So this is also correct statement. Now, fourth question was maximum profit which can be earned in month 3. Now this is really interesting, and I'll just explain you this in a very, very good way, and will give you a very good clarity. So if I just quickly move towards my graph here, so it says month 3 is a month where uh, uh, there are multiple limiting factors, because whenever you see linear programming graph, so it's clear that there are multiple limiting factor, because linear programming is a technique that you use when there are more than one limiting factors. So yeah, it's definitely a multiple limiting factor situation in month 3. Now, having said that, the graphs will be prepared, and you will be getting the graphs in the paper. So you have to solve the question using the graph, and I just want to teach you that. Just give me a minute, please. Just a minute. Okay, so welcome back. Okay, guys. Now just concentrate and I will explain what we have to do. Now, we have different lines here. So let's identify the limiting factors. Obviously, when linear programming is, so there are more than one limiting factors. So you can see here that this line of H is a limiting factor. This is limiting factor for a demand. Okay. And this S is also a limiting factor, and this is also a limiting factor for demand. Okay. Then what you have is you have another line of this. So this is of labor because labor is 24,000 and this equation is of labor. So this is the labor limiting factor. Then you have material limiting factor. As you can see, 35,000 are available in month 3. This is the material limiting factor. This is a material line. And machine hours, we have maximum machine hours of 12,000. So this line is of machine. So this line is of machine and this machine is the limiting factor. Okay. So we have different lines here as limiting factors, and I just showed you the different lines. So these are demand based, these two are demand based, and the rest three are resource based limiting factors. Okay. Now, if I just go to my steps here, so the step says that you have defined the variables. All these things have been done already. Now, this is something that we need to do here, identify the feasible region. So feasible region depends on the inequalities and you need to find out the inequalities. So keeping that in mind, if I just go to the question, so it is very much clear by reading here that these are the maximum availability. Maximum availability means that all the limiting factors are less than or equals to, because once I say maximum, so it all means less than or equals to, and less than or equals to means that these are maximum material labor hours or machine hours that are available. So all are maximum, which means less than or equals to. And if I say about demand, so I have seen here the maximum demand is 4,000. As I can see here, this is 4,000 line, and the maximum demand for H is 3,000, which I can see here, 3,000 is given here. So maximum means that you cannot exceed beyond that, and if you cannot exceed beyond that, so this is represented by maximum inequality, which is less than or equals to. Now all the equations, material less than or equals to, labor is less than or equals to, demand is less than or equals to, this demand is less than or equals to, machine is less than or equals to. So all the limiting factor are less than or equals to, which means these all are maximum available and you will not get any of the resources after that. So we need to find out the feasible area. So the feasible area, you remember the shortcut, when all the inequalities are of less than or equals to, the feasible area is the most inner region. I repeat, when all the inequalities are less than or equals to, so the most inner region, which means most the region which is near to the origin. So most inner region to the origin is the limit, is the feasible area. Now you try to identify the feasible area. So I'm sure you will be able to find out what the feasible area is here. But my simple point is that when all the inequalities are less than equals to, so remember the most inner region is the feasible area. So you can remember this through the shortcut that I mentioned right now. Now let's move towards a very good methodology through which I will be discussing the answer and will explain you what you need to do to find out the feasible area. So let's just okay. Now this is the graph, as you can see, and this is the same thing. As I mentioned that all the inequalities are less than or equals to, so the most inner region is the feasible area. So what is the feasible area? Let's have a look. Now you can see here. See how I'm explaining, and this will make your life really easy. Just understand my method. It's the most easiest method that I'm adopting here. So feasible area are what you can see. These are the points, and the feasible area is OABC. So this is origin, and OABC are the feasible areas. So this is the feasible area. As I mentioned, the most inner region is the feasible area, and the steps says that once you have found out the feasible area, which is OABC, then identify the points in the feasible area. So the points means the corners of the feasible area. When once someone say corners, uh, so what are the corners of the feasible area? So you can see here the corners of the feasible area are very clearly mentioned here, and those are A, B, and C. So the most inner region, you can see this is the most inner region, and this is the feasible area. So when all the inequalities are less than or equal to, so the most inner region is the feasible area. As I am mentioning here, this is the most inner region, and how I found out that the inequalities are less than or equals to, because of the word maximum was written everywhere. So maximum means you cannot go beyond that. So the inequalities will be less than or equals to. Okay. So as I have found out the feasible area, now let's see what step says to find out the answer. So to determine the optimum point, which means the optimum point would either be A, or would either be B, or would either be C. So to find out the optimum point, we have two methods. One is by inspection method, which is comparatively a time taking method, uh, and you have ISO contribution method, which is time saving method. So as time saving is ISO contribution, so I'm focusing on ISO contribution line method, and let's see what are we required to do. So let's use ISO contribution method to find out the answer. Now in the original question, as you can see here, you can see a line that is here, given here, and you can see on this line it's written 250S and 3115H. So these are basically the contributions that are given here, 250 and 315. So these are the contribution. So this is very much clear that these are the contribution, and this line is ISO contribution line. Okay, so this is ISO contribution line, which is already given to you. And how I figured out was by looking at the figures here. These are the contribution per units which are given to me above as well. So these are ISO contribution line. Now let's see how to find out the answer through ISO contribution line. Friends, are you ready to see the magic? Say yes. Are you ready to see the magic? Ready? Okay, so let's see. How will I find the optimum point through this ISO line? Okay, so I'm sure you have never seen something like this before. So let's see. Now this is the ISO line, and you have to scale up the line. You have to scale up the line. You have to extend the line to the outer region, and we will see how this is done. So let's scale up the line. Okay, see what is happening here, and do give me your feedbacks if you like this. See, magic happening. The line will go now upwards. See, it's going upwards. Can you see, everyone? It's going upwards. Yes. Okay, so as you can see here, I can easily figure out the answer now. And how will I figure out the answer? So it's very simple. You just scale up the line, and see the last point the line touches, the last point. So first it touches A, then it touches C, and last it touches B. Okay, so the last corner of the feasible area that the line touches is the answer. So this is a very good method to find out the optimum point. You just have to make the ISO line, and if it is given, just scale up the ISO line through the scale or something straight thing, and then see the last point. See the last corner that it touches is B. So the last point that the line passes through is B, and B is the optimum point because we don't have any other corner after that. So out of A, B, C, the last point that the line touches is the answer. And you can see again, the answer is B. So as it goes up, the last point it touches is B. And yes, this B is the answer. So did you like the method, guys? Come on. Is it different way to teach? Do you liked it? The way I just explained to you how it went up. I'm sure this would be an amazing technique for you, right? So do give me your feedback here, please. So as you just saw here, that you scale up the line and the last point it touches in the feasible area is the answer. So optimum point is B, and I found out the point B as my answer here. So Mercy, you are saying how do I scale up the line? So when you are doing your paper, you have the screen, that the monitor screen in front of you, and what you can do is you can just keep the line on the ISO and just scale up. So you need to practice this, as I don't have the camera facility here. Otherwise, I would have explained you through my hand here. So just try to scale up on your monitors, just through the scale. You can use the scale and just see uh, the last point that the line touches. Okay. So B is the optimum point, and now B is the answer. So let's see the lines that are intersecting at point B. So at B, there are two lines that are intersecting. One is the line of H, which is H is equals to 3000. This is the first equation. And the second line that is intersecting other than this one is this line, and this line is of machine hours, I guess. So this is the machine hours line, and this is equation 2, which is 3s plus 2h is equals to 12,000. So this is the machine hours line that is intersecting with the other one. So there are two lines that are intersecting here. Now, once we have found out the feasible point, the last point in the feasible area that the ISO line touches, now let's first find out the profit. So I can further solve this. At this point, it is clear H is 3000. H is 3000. Okay. So I just need to find out S now. So let's put equation 1 into equation 2 through simultaneous substitution method. So I'm putting H into second equation. So this would be 3S plus 2. Uh, Instead of H, I will write 3000 as I'm putting H into equation 2, and this equals to 12,000. I will further simplify this. So this will be 3S plus 6,000 is equals to 12,000, and then it's 3S is equals to 12,000 minus 6,000, and this is 3s is equals to 6,000, and s is equals to 2,000 units. So this is the answer, 2,000 units of s, and my optimum point is B, and at this B, the optimum production plan for me will be what? That we'll manufacture 3,000 H and we'll manufacture 2,000 S. So this is my optimum production plan as you are seeing in front of me. Okay, so this is the optimum production plan that I have just explained you, and the optimum point. So at this point, there were two lines that were intersecting that I showed you. One is the demand H line, and second is the machine hours line. So this is the optimum point, and yes, you are clear about this. Substitution method is the simultaneous equation method. You solve simultaneously, right? So substitution method is a simultaneous equation method. When you solve two equations simultaneously, so you have elimination method and substitution method. So Monas and substitution method, what we do, we put one equation into the other one. So as I had the answer of H already, because at this point H is 2000, which is very much clear. So I just had to find out the answer for the other one, but it was really much obvious here. You can see from this graph, only from this graph, it is clear that this is 3000H and S was already defined at 2000. So in this question, the examiner did mention the answer by drawing the lines here. As you can see, these lines are clearly indicating the values, but still I just told you the method as well, how to solve this simultaneously. Okay, so it's a substitution method, which is a simultaneous equation method. So in this question, it was itself very much evident that 2000 is S and 3000 is H, so which is clear to all of you at this point. Now, as I have found out the answer of optimum production plan, I did solve this and I showed you it was already given in the answer as well by looking at these lines. So now let's work out the final profit answer. I know the optimum production plan is now given to me. So now let's move towards the final answer and let's solve here for the profit. So I know what the contribution is. The contribution is given to me 250 and 315. I am required to find out the maximum profit so that I can do very easily. Let's first find out the contribution, the total contribution. Let's find out total contribution. Uh, so according to the plan, how many S we will be making? 2000 plus multiplied by the contribution. So the contribution of S is 250, I think. 250 plus how many H we will make? 3000. And how much is the contribution of that? 315. So through this, I can work out the total contribution, total contribution figure. I will work out here. And from this contribution, I need to deduct the fixed cost. And then I will be able to work out the profit. So fixed cost is given to me here. Fixed cost is how much? How much is the fixed cost? It's 300,000 is the fixed cost each month. So we will deduct the fixed cost and we will get the profit. Okay. Yeah, Fatma, it's okay. 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 So uh, can any one of you tell me the final profit figure? If you can quickly work out and tell me the answer of the profit figure that you have worked out here, so that we just finalize this question and move on to the next one. If someone can quickly work out the contribution. And I hope the method that I explained you to find out the optimum point works well for you. Okay, so profit is uh, 1145. C is the answer, confirmed by the student that the answer is C. Okay, so are we clear about the answer, everyone? So this is my contribution, 1,445,000, and I will deduct the fixed cost and will get the profit answer of, sorry, I just chose the wrong option, 1145. Yeah, D is the answer, 1145, and this is the answer of profit. Now let's quickly answer few questions of certain students. Okay, I just saw here one of the students said I could not find the optimum point. So friend, it's really easy. This is the ISO line C. This was given in the question. You just need to scale up the line. Just take the line to the upward direction and see the last point the line touches in the visible area. So it touched A, then C, and then B. So the last point that the line touched was B, and B is the answer. So you have to just keep in your mind the last point that the line touches is the answer. So it touches B. B is the last point, and B is the answer. Okay. So B is the optimum point, and at B, it is clear that there are 3000 H and there are 2000 S. 3000 H and 2000 H, which is clear here. But if this was not given, for example, in the paper, so what you could have done, you could have found out the equations that are intersecting here, which is H and machine hours equation, and you could have solved this simultaneously. So you would have got the same answer as you just saw. I did solve this simultaneously and got the same answer, and I use substitution method. That is that is I put equation 1 into 2 because I already had the figure of H here. So once I put that into the other equation, so I got the answer of S, and this is the optimum production plan. And after that, I worked out the profit. Okay. So I hope this is clear. Temwa, feasible region, you need to ask. All the inequalities are of less than or equals to. Okay. So when all the inequalities are less than or equals to, so the most inner region is the feasible area, because all the lines are of less than or equals to, so most inner region will be the feasible area. So as you just saw here, all the lines here were less than or equals to, which means this is less than or equals to, this also says less than or equals to, this was less than or equals to, this was also less than or equals to. So once all the lines are less than or equals to, so the most inner region is the feasible area, and this is the most inner region. As you can see, this is the most inner region, and this is the feasible area. So we just saw the corners of the feasible area, and those were A, B, and C. Okay, Temba. So this is the feasible area. Yeah, there is a possibility that greater or equal to can be tested in the paper, but in lots of questions I have seen less than or equals to only being tested up till now. So this is clear to all of you, and I have just found out the answer, and I just saw you the technique to find out. I hope you like the technique. Now let's move towards the last question. Which of the following interpretations of linear programming graph produced for month 3 is or are correct? So it says that all of the all other things being equal, unless demand increases for either product, labor will be a slack variable. Okay, now let me quickly tell you one thing, the important $1 million points. You need to remember these $1 million points. Those will definitely help you. Remember, shadow price will only be worked out for resource. Okay, resource means material is a resource, labor is a resource, uh, and machine hours is a resource. So you work out shadow price for all the resources. Okay, but remember, if you quickly want to learn by looking at the graph, if you quickly want to learn by looking at the graph, when you will work out the shadow price and when you will not work out the shadow price, and when there will be slack and when there will be no slack. So I'm telling you this. So shadow price is worked out for the resource, but slack is for a resource or demand for both. Okay, slack means underutilization. Okay, slack is the underutilization. And shadow price is what? Shadow price is the additional contribution. Okay, per hour. Sorry, additional contribution. Okay, so remember, uh, slack will always exist. Slack will always exist on non-optimum point lines. This is a rule of thumb. This is $1 million point. If you want to find out slack is underutilization of a resource, and underutilization of a resource means that you haven't used the resource completely. You haven't used the resource completely means that you haven't fulfilled the entire demand of the resource. Okay, so slack will always exist either for resource or for demand on non-optimum point lines, which means the lines where optimum point is not present. On all those lines there will be slack, whether it's a demand line, whether it's a resource line. And where is shadow price? Shadow price will be worked out for all the lines where optimum point falls, okay. Now let's quickly see here, through our graph, where will be shadow price and where will be slack. So let's understand this in a quick way. Now this is the graph. Let's clean all the stuff from the graph and I will quickly show you that how will you find where the slack is and where will you be able to find out the shadow price. So let's understand this very quickly. Now, as we know, the optimum point is B. Okay, we know optimum point is B. B is the optimum point. Now, once you are clear, listen very quickly, guys. This is a very good concept. Once you are clear that optimum point is B, or I would say if you are clear that what is the optimum point, so here it's B. Okay, so we know B is the optimum point. Now on this optimum point there are two lines that are intersecting. One is H3000 demand line, okay, demand line, and second is the machine hour line. You can check later on using the question as well. So these two lines are intersecting here. So both the lines, now these two lines are intersecting here. So remember that one line is of demand. So here you won't calculate shadow price, but you can calculate shadow price for machine hours. You can calculate shadow price for machine hours because the optimum point is at this line. So remember, by looking at the graph you can figure out that if the optimum point is at one of the resource line, if the optimum point is at one of the resource line, you will work out the shadow price for that. You will work out the shadow price for that because here the resource has been fully utilized, which means if there are 12,000 hours, so 12,000 hours are fully utilized. 12,000 hours are fully utilized and you can work out the shadow price. So this is a very good shortcut to remember that once you have identified the optimum point, and if optimum point falls on any of the resource line, so you will work out the shadow price because that resource has been completely utilized. Okay, now all other lines, so what, you can find out the other lines here. So we have this line. Okay, this is of labor, I guess. Yeah, labor line we have, and we have this S line. S is the demand line. Okay, and there's one more line here, this one, this is of material line. Okay, material line. So three lines you can see, this line, you can see this line, and you can see this line. These are the lines where optimum point is not there, where optimum point is not present. So lines where optimum point does not exist are the lines known as where slack will exist. These are non-optimum point lines, and here will be a slack. So slack means underutilization, which means there are 24,000 hours of labor available, but you will not utilize entire 24,000. So there is a slack. Again, material, you have 35,000 kgs of material available, but you will not use 35,000 kgs because there is a slack, underutilization of a resource. Slack also pertains to demand as well. So if uh, there are 4,000 maximum units that you could have produced, so you could not produce entire 4,000, and you can very quickly cross check. You already have found out the optimum units for S, and the units were 2,000 units. Okay, so final plan was that we'll produce 2,000 S, and you can clearly see there is a slack of 2,000 units because you just produced 2,000, but you could have produced 4,000. So there is a slack of demand here as well, and for resources there will be slack as well. So the best way to keep this in your mind is what? Just look at the graph. Listen, these are the final words I'm telling you. Just look at the graph, just look at the graph and see the lines where optimum point falls, the lines where optimum point falls. So the lines where optimum point falls are the lines where shadow price will be worked out, but only for a resource. So if there is a resource line, like machine hour is a resource line, so you will work out the shadow price. Okay, but all other lines where optimum point does not falls are one where slack will exist, whether those are resource line as you can see here, or whether those are demand line. So slack will exist. Slack means underutilization of a resource. Slack means the resource is not fully utilized, and that is why there will be spare capacity. Yeah, that is why there will be spare capacity. Okay. Sir, optimum point should be found before ISO leaves the feasible area. Yeah, this is okay. This is just a small, I would say that I didn't stop at B, but B is the last point. Okay. My line just went upwards a bit. So yeah, you are right. But B is the point. This is, you can say this is some kind of a, technical mistake here. The line went a bit upwards, but it should have stopped at B. So B is the answer. Okay. So slack is underutilization, and slack exists for material, for labor, and for demand. So I hope this is clear. The $1,000,000 points will help you to recognize when you need to work out shadow price for a resource. So remember, whenever you found out the answer on any resource line, whether that is one resource line or the optimum answer is at two resource line, for example, so at both you will work out shadow price. But all other lines where optimum point doesn't falls, whether those are resources or demand, there will be slack, which means underutilization will be there, which means you will not use the resource completely, or you will not fulfill the demand completely. Keeping this in mind, let's finalize the answer. If machine hours were sorry, all else being equal, unless demand increases for either product, labor will be slack. Yeah, so this is true. As we just saw in the graph, that labor line is a slack. So yes, this is true. This is slack. Second, if more machine hours were available, uh, in month 3 they would be used initially to make H. uh, so would you make H here? So let's see, if more machine hours are available, will we make H here? I don't think so, because we have fulfilled the entire demand of H. We have fulfilled the entire demand of H by producing 3,000 H. So the maximum demand of H was 3,000. If you see here, 3,000 was the demand, and we fulfilled the entire demand. So our optimum production plan did mention that we will produce 3,000 H. So this means if we get more machine hours, so we will not produce H, because already we have fulfilled the entire demand of H, which was our answer. So we will be producing S using those machine hours, because we haven't fulfill the entire demand of S as per our optimum production plan. So this is wrong. If we get more machine hours, we'll produce H more. Sorry, we'll produce S more, not H, because H entire demand has been already fulfilled, as you just saw that in our optimum plan, we just decided that we will be making 3000 edge. Okay. Okay, so I hope this is clear to all of you. So the correct option is now quite evident, and you will be selecting that correct option easily. So one is the right statement, second is wrong statement. And remember my $1 million stuff that I told you, this is how you will find out the shadow price and slack. By looking at the graph, you can easily figure out when to work out shadow price for a resource and where is slack. I'm sure you will be able to find out. So you just have to look at the graphs and you will be able to figure out whether there is slack or not. I hope this is clear. So this is the graph, guys, and you can just look at the graph and find out. So I hope this is clear to all of you. Okay. Uruj Amir, your question is why shadow price set as price? It's a name, it's basically an additional contribution we say, okay? So don't get into that much detail. It's a price because normally we say that this is the maximum we can pay as overtime premium to the staff for additional hours. So this is the maximum price that we can give the labor for the overtime, okay? So guys, did you like my method of finding out the answer through this scale up technique? And the $1 million points will help you as well. I hope this is clear to all of you. Understood it, everyone? Did you like the technique? Say yes or no. Now we are moving towards the day 3 plan, and that is all relates to decision making first and then the variances. Okay. So are the $1 million points clear? Now let's start with pricing first. So pricing is a key topic for our examination. There are certain things that are tested a lot in pricing. So I'm starting with the main area of pricing, that is the economist view. You all know price or demand function. What is price or demand function? You should know that price is equals to A minus BQ. Okay, this is basically a price or demand function where P represents price and where A represents price, where demand is 0, where B is your slope or gradient, and Q represents your quantity. So, economist view we are considering here, and we are discussing here price or demand function. So, I hope you are aware of this equation. Now, there are certain formulas here to find out A and B. So, let's write how to find out slope and how to find out A. So I'm just writing here the formulas so that you are able to copy if you want to and find out the answer accordingly. Okay, so these are the formulas to find out A and B value. A is the price. A is the price where demand gets 0, and B is slope or gradient of the line. So you all know the economist approach, and that is law of demand. I hope you know what law of demand is. It's a graph like this, which is an inverse line where you see price on y-axis and demand on x-axis, and you know it's a price demand relationship. So at this price you will get this demand, at this price you will get this demand. So you know, as the price goes down, the demand increases, and it's vice versa. It's an inverse relationship. So as price goes down, demand increases, and as price increases, demand goes down. So it's a demand function, as you can see in front of your screens. And this graph has an equation, and the equation of this graph is P is equals to A minus BQ. So this is the demand function equation. This is the price function equation that you can see here. So just note down the formulas to calculate A, and to calculate the value of B. B is slope and A is price at which demand is zero. So let's start our discussion. To find out profit maximization point. What is a profit maximization point? The point where your profit will be maximized. So you are frequently tested in your examination to find out the profit maximization point in your paper. So there are two approaches to find out the profit maximization point. The first approach is known as the algebraic approach, which is uh, MC is equal to MR approach. And second approach is a tabular approach, through which you can find out the profit maximization. So there are two approaches through which you can find out the profit maximization. One is the algebraic approach and second is the tabular approach. Okay. So first I'm starting, and yes, for sure, I will just be covering here the most important one, and that is the algebraic approach, through which we will be finding out the profit maximization point. And for this, we will be using the demand function for sure, which is in front of you. So let's now move towards our past paper question for today. And that question is ALG company that I'm starting right now. So let's start with this past paper question and see what is the profit maximization point. So let's see what we have here in the question of ALG. Okay, here we have the question. Let's just mark things. It says that the company is launching a new underlying innovative product onto the market and is trying to decide on the right launch price for the product. The product expected life is 3 years. So let's underline this as well. Given the high level of costs which have been incurred in developing the product, so this means there is a high cost. The company wants to ensure that it sets its price at the right level. So this means company is trying to find out what price. The company is interested in finding out the price. Okay. So, and has therefore consulted a market research company to help it do this. The research, which relates to similar but not identical products launched by the other companies, had revealed that at a price of 60, annual demand would expected to be 2,50,000. So this information is one that relates to the other similar product through which you are understanding what you have to do. Now, a quick reminder, please join my WhatsApp group if you haven't yet joined. Uh, the link has been shared by our team here in the chat box. Even the link is available on your PDFs that I have made available for you people today. Just follow the today's PDF where you have the clear link. And if you still cannot join, so just WhatsApp me at this number 92321 2436 You just WhatsApp me. I will send you different documents for your examination for March 2020, and will also be giving you support till the end of your exam. So make sure that you join the WhatsApp group if you haven't. And if you can't join through the link, just WhatsApp me. I will send you the link through which you can easily join. I will also be sharing a lot of resources like some drafted answers of the question that we did yesterday, and further material for practice for OTs especially. So I will be giving you uh, lots of OT questions for practice before your examination. So for that, please join the group. Okay, let's come back to the question. It says that for every $2 increase in selling price, demand would expect it to fall by 2,000 units, and for every $2 decrease in selling price, the demand would expect it to increase by 2,000 units. Okay, so we can see here a change in price by $2, a change in price by $2 results in a change in demand by 2,000. So a $2 change in price results in 2,000 units change in demand. Okay. A forecast of the annual production cost which would be incurred by the company in relation to the new product are as follows. You can see annual production at 2,000, 250, 3 and 350. You can see direct material, direct labor and overheads here as well. It says calculate the total variable cost per unit and the total fixed cost for 3 marks. So we are required to work out the total variable cost per unit and the total fixed cost for 3 marks. Let's start our calculation. So how to find out the total variable cost per unit first? So let me start with direct material here. And if I start with direct material, so there are 4 activity levels given here. So you can divide and work out the material cost per unit. You can choose any activity because it's a variable cost, so it will remain constant per unit. So I am dividing 2400 thousand with 200,000 and I will get per unit direct material cost. Okay, now you need to just take out your calculators and start doing the workings along with me so that we can quickly find out the figures. So please just start your calculations and just take out your calculators and start the calculations with me. So what do you think your answer here will be for the labor, sorry, for the material per unit? So it's 2400 divided by 200 and this is 12 for material. Okay, so it's 12 for material. Now for labor, direct labor, I am doing the similar thing here for labor as well. And what I am doing for labor, it's simple. You can see here, it's what you call 1200. You can use any activity, divide this with 200,000, and you will get the answer here of 6 per unit. So labor is 6 per unit and material is 12 per unit. You can do this for any activity and you will find the similar per unit cost. Okay, so it remains the same. Now for overheads, yeah, for overheads, if you quickly work out the per unit, because as I mentioned, for direct material and direct labor, the per unit will come same at each and every activity if you see. So whenever the per unit is same, remember uh, whenever the per unit is same, remember it's a pure variable cost. Okay, you just divide here. You will see 12 here, 12 here, 12 here, and 12 here. 6, 6, 6, and 6. So remember, it's a very key thing to remember, and this is a very good way actually to find out whether the cost is semi-variable or not. Because usually students do ask me, sir, how do we find out a semi-variable cost? So the best technique, the best shortcut to do is that you calculate the cost per unit at different activity levels, as I've done for material and labor. And once you see that once you divide the cost with the units and once you work out cost per unit, so if your cost per unit is constant, so it's a pure variable cost. But when your cost per unit is not constant, so it's a semi-variable cost. So you can just check here for overheads, 1400 divided by 200 if you do here, so your per unit is coming 7. Okay, let's see if I divide 1550 with 250 here. So will I get the same 7 here? Yes, guys, are you all with me? So I don't think it's same. It's 6.2 now. So this means from 7 it went to 6.2, and when it went to 6.2, or when the per unit cost is different, so it's very clear that it's a semi-variable cost. So this is $1 million technique to find out whether the cost is variable or semi-variable. It's variable or semi-variable. So the best thing is you work out the cost per unit. If per unit remains constant, it's a variable cost, and if it does not remains constant, so remember it's a semi-variable cost, and semi-variable cost is a one that you need to separate through high-low method. Okay, through high-low method you need to separate this semi-variable cost. I hope this is clear to all of the friends. Is this $1 million technique clear? Whenever you want to find out whether a cost is semi-variable or not, so just calculate cost per unit at two activity levels. If per unit remains same, so it's a pure variable cost as for material and labor. And if per unit it's not same, as it is not same here, at two activity it would be clear. Okay, you don't have to check for all. So if it does not remain same, so it is a semi-variable cost. And for semi-variable cost, what method do we follow, friends? We use high-low method. So let's use high-low method to separate the overheads. The highest activity is 3,50,000 and the lowest activity is 200,000. The overhead at highest is what you call 1850, and at lowest it's, I think, 1400. So let's work out the cost here per unit, and the per unit cost, I hope people are doing calculations along with me here. So the per unit cost, yes, anybody has worked out the answer, is 3 per unit variable. Okay, 3 per unit is variable. And now let's find out the fixed cost here. So for fixed cost, you all know that you either choose highest or lowest. So let's choose highest here, 3,50,000 units we are choosing here. And let's work out the fixed cost. So let's start with total cost. The total cost is 1,850,000, and from this let's deduct the variable cost. So it's 3,50,000 into 3 makes how much? It is 1,850, sorry, it is 1,050,000. And once you deduct, you get the fixed cost, and that fixed cost amounts to 800,000 is your fixed cost. Okay, so 800,000 is your fixed cost that you have worked out through the high-low method. And I think we are done with part A. The variable element is 3 and the fixed element is 800,000. So first part answer is simple. Variable cost includes direct material of 12, direct labor of 6, and variable overhead of 3. So this makes 21, whereas the fixed cost is 800,000. So this is the first part answer that I have worked out in front of you people. Okay, guys? Agreed? Clear? So I'm sure this is not that much difficult for you to handle in the examination. And you can solve this. Okay, so we are done with part A. It's 21 and 800 is the fixed cost. 800,000 is the fixed cost. Okay, so 21 and 800,000. Now the next part. Calculate optimum profit maximizing. So we need to ensure profit maximizing selling price for the new product and calculate the resulting profit for the period. Now, if I just go back to my presentations, so I just saw that profit maximization point is what I need to find out. And as I mentioned that this profit maximization is something that I can find out through two approaches, algebraic and tabular. So how will you find which approach you have to follow right now? So the approach that you have to follow right now is algebraic, because it says MC is equal to MR. MC is marginal cost and MR is marginal revenue. So let's use MC is equal to MR approach here. And how I'm finding this, because in the question it is written that follow this MR and MC approach. So by this, I am understanding that I have to follow MC is equal to MR approach for the calculation of optimum profit and the selling price. So friends, I need to find out the selling price, which is the best selling price, which will ensure profit maximization. And the approach that I am following here is MC is equal to MR. So there are certain steps for MC is equal to MR that you should know, that you should follow. There are certain steps to follow for MC is equal to MR that I am mentioning here. So you can copy those steps as well. Okay, so let's now start with our solution here, and let's see how are we supposed to find out the answer of optimum point. Okay, now the steps of algebraic approach, MC is equal to MR. So first is price or demand function. The first step is you need to find out the price or demand function. Second step is what? Second step is you need to use the equation of MR, and the equation is marginal revenue is equals to A minus 2BQ. Okay, so use the equation of MR, and the equation is MR is equals to A minus 2BQ. Then third, what? Replace MR with MC to calculate profit maximizing quantity. Okay, and the last is use price function. In price function, use optimum quantity to find optimum selling price. Okay, friends. So just copy the steps that are in front of you. For MC is equal to MR, you need to follow these steps. The first is price or demand function. Second is use equation of marginal revenue. MR is marginal revenue, which is MR is equals to A minus 2BQ. A minus 2BQ. Replace MR with MC to calculate profit maximizing quantity. In price function, use optimum quantity to find optimum selling price. Okay, so keeping these in mind, I think it's time to start now. And let's first start with price or demand function as it's mentioned here. So I need to derive the equation, which is P is equals to A minus BQ. So for this, what I am supposed to do, friends, I need to find out the value of A is what I need to find out, and I need to find out the value of B here as well. So let's find out A and B first. Now for A, the formula is clear as I gave you the formula for A. Current quantity. Now, I will be using here the estimated numbers of the similar product to gauge the idea. So I will be using the information that is given here, that is at a price of 60, the demand expected is 2,50,000. So this is something I'm treating as a current price and as a current demand as well. So formula says price is 60 plus, at this the demand is 2,50,000. Now by how much the price changes and demand changes, so a change in price by 2 results in a demand change by 2,000. So change in demand is by 2,000 when the price changes by 2. So you can work out the answer of A. Now let's see how many people will help me here and are quick in doing the calculations. So the answer of A is, I can't find any answer here. It's 310. A is 310. Okay. Now let's find B. So what is B? Change in price is by 2, whereas the change in demand is by 2,000. And let's see how many people will help me here. So it's 2 divided by 2,000, which is 0.001. So this is gradient, and the equation is now P is equals to 310 minus 0.01 Q. So this is the demand function that you can see in front of you. I hope this is clear, very much clear to all of the students who are listening me right now. Okay, friends. Okay, so we are done with the first step, right? We are done with the first step, and let's move on to the next step. And that next step is that we need to use the equation here of MR, right? So as I have already worked out the equation, which is price is equals to 310 minus 0.001 Q. This is my equation. Now let's use this equation for MR. So I would be writing here marginal revenue is equals to 310 minus 2BQ. So 2 0.001 Q. So it's 2BQ, right? And once I solve this, so this will be MR is equal to 310 minus 0.002 Q. Agreed, guys? I hope this is clear. Now let's do one more thing. And what is that? Let's replace MR with MC. Let's replace MR with MC because it says that the point is of profit maximizing point. The point is of profit maximizing point when MC is equals to MR. When MC is equals to MR, so it's the profit maximizing point. Agreed? So friends, how much is MC? So we have done the working of MC. MC is 21. This is variable cost. Marginal cost is variable cost. Marginal cost is what, guys? Variable cost. What is marginal cost? Cost to produce one additional unit. Cost to produce one additional unit is marginal cost, which is similar as variable cost. Okay, so friends, as we know the marginal cost here. So let's replace it to find out the optimum quantity. So I'm writing here 21,310 minus 0.002 Q, and you will find out Q from this equation now. So I need people to quickly work out the answer of Q for me here and see what answer are we getting here for Q. So I'm waiting for the answers. Let's see. Who responds first. So solve this equation for Q. Can you solve this? Okay. So the answers that I am getting from the students for Q is 144,500. Yeah, it's 144,500. So the Q is 144,500 units. Okay. So these units are optimum units, or I would say these are profit maximizing units. So remember, when your marginal cost to produce additional unit is equals to marginal revenue, which means the revenue per unit that you will earn by selling one more unit. What is marginal revenue? The revenue that you will earn if you sell one more unit. If you sell one more unit is marginal revenue. So if the revenue of one more unit gets equals to the cost of one more unit, so that is profit maximizing point. So at this point, what is the optimum quantity? So the optimum quantity at this point is 144,000 units. So if you sell 1,44,500 units, you will be maximizing your profit. Now let's see in price function, which is P is equals to 310 minus 0.001 Q. Let's put the figure and let's find out what is the optimum price at this quantity. What is the optimum price at this quantity? So I'm waiting for the answers again. And let's see. The price is 165.5. So this is the optimum selling price. Okay. So this is the optimum selling price that you are getting right now here. Are you all with me, guys? Come on, say yes. Is this clear to all of you? Okay. So it's 165.5, which is the optimum selling price. For units, you have to solve this equation. That's it. Okay. Okay. So you need to solve this for Q here. Just work back for Q. Okay. Just work back for Q and you will get the optimum quantity. So at MC is equal to MR point. MC is 21, MR is 21. So if both becomes equal, this is known as profit maximizing point. Okay. Profit maximizing point. And we have worked out two things: the optimum selling price and the optimum quantity. So if you sell 1,44,500 units in the market, your profit will be maximized. And how much price should you charge to sell 1,44,500 units? So the price that you should charge is 165.5. Okay. So I hope this is clear. Now, the requirement asked you to calculate the resulting profit as well. Okay, profit as well. So we can work out the profit now because we know the price. So we can work out the profit very, very easily. Let's work out the revenue. And what is the revenue? 1,44,500 units. We'll sell at 165.5. Then comes the cost, variable cost. And we know what is the variable cost per unit. So it's 144,500 multiplied by 21. And we know the fixed cost as well that we have worked out from the previous part. And that fixed cost was how much? 800,000. So come on, can any one of you tell me here what profit are you getting? Okay, so you can work out the profit as well, I'm sure. That is not an issue. So you need to deduct from this revenue the fixed cost and the variable cost, and you will get the profit. So hope this is clear to all of you now. Any questions you have? Okay, so the profit is clear and my calculations are, I hope, clear to all of you. The steps. Okay, you are not clear how I got A in the function. So it's simple. I first found out the price or a demand function. So I told the formula to work out A. I mentioned the formula to work out A, and this is the formula to work out A. Okay, and this is the formula to work out B. So if you know the formula, you can easily work out. Okay, Mercy. So through this formula, it worked out A, 310, and worked out B as well. Then for MR, I have to use the MR equation. So which says A minus 2BQ. So gradient has been multiplied with 2. So this becomes MR is equals to 310 minus 0.002Q. Okay. And then I've replaced MC with MR. So MC is 21 as we just worked out in the previous part, and just work back this equation and you will get quantity of 1,44,500. So this quantity you will input in the price function to work out the price, and this is the price you have. So you can work out the profit as well. The units multiplied by the selling price, units multiplied by the variable cost, and deduct the fixed cost. Okay, are we clear? Okay. So this is how you work out MC is equal to MR profit maximization. These are the steps that you have to follow. Now, let's move towards the next part, which says that I need to I need to solve a bit of a theory here. Let's see, it's a 5-mark theory. The sales director is unconvinced that the sales price calculated in B above is right one to charge on the initial launch of the product. He believes that a high price should be charged at the launch so that those customers prepared to pay a higher price for the product can be skimmed off first. Now, discuss the conditions which would make market skimming a more suitable pricing strategy for ALG and recommend whether ALG should adopt this approach instead. So, examinable word we discuss, and the object is the conditions. So, you need to discuss the conditions for skimming, and then another verb is recommend. And then you have to recommend what? Whether the company should adopt this. So you have to recommend the policy. So there are two verbs, discuss and recommend. Okay, for that, let's quickly move to my slides and see. Skimming. Skimming is what? When you charge high prices at initial phase, and conditions are what? When the product life cycle is short, you use skimming so that by charging higher prices, you can easily enter into profits. When there is inelastic demand, what is inelastic demand? Inelastic demand means what? Inelastic demand means that a change in price will not have an effect on demand. A change in price will not have an effect on demand. So this is inelastic demand. So if you charge a higher price, it will not have an effect on the demand. So when the product has an inelastic demand, skimming should be used because you know charging a higher price will not have an impact on the demand, not in that big way. Production is limited at the early stage, then you can use skimming where there are barriers for competitors to enter. So barriers means that not everybody can enter very easily. Not everybody can enter very easily is barrier to entry. So is that true? I think it's true. It is true. So let's find out from the scenario. Conditions. So first, is the product new? Yes. Innovative? Yes. And the life is 3 years? Yes. So it seems to be a shorter life cycle of 3 years, right? High level of cost? Yes, which means not everybody can enter the market easily. So by looking, it's a new innovative product, which means it's a unique product. And being unique, it seems to be difficult for people to enter. So there is simply a barrier to entry here because the investment that you require is also high level and not everybody can enter the market. And the life cycle is not that big. It's a short life cycle of 3 years. Okay. So considering all these things, that is high cost, 3 years life, 3 years life, there seems to be barriers to entry. So yes, it seems that for this product, ALG can use skimming strategy. It seems to a greater extent that the company can use skimming strategy here. Agreed, guys? So you have to discuss this in a paragraph form. In a paragraph, first paragraph, you will discuss the conditions. And the conditions are very clear. you know the conditions. You can mention about the 4 conditions that I just showed you. 1, 2, 3, 4 in a paragraph. Then in the second paragraph, you recommend the suitability by mentioning in the answer that there is a high cost involved plus 3 years life. So it seems there are barriers, and considering those barriers, you recommend that company can follow skimming strategy here in second paragraph. Understood the drafting here? First paragraph tell the conditions that you just saw, and then recommend that company can follow, because these are the things mentioned. You have to mention this. You need to link with the scenario. Okay. Now coming back to what is penetration, when you charge lower prices at the initial phase. So what are the conditions? Number one, when you want to target a higher market, so you charge a lower price. When you want to target a higher market, you charge lower prices, because if you charge lower price, you know that big market share you can capture. Secondly, when demand is elastic. What is elastic? You know that, guys? What is elastic? When a small change in the price results in a big change in the demand. When a small change in the price results in a big change in the demand. So when demand is elastic, so you know a small reduction in the price can give you a big increase in the demand. So you go for this option. Or you need to discourage competition. So when you need to discourage competition, no, you won't be asked to draw a graph in the examination. Okay. So to discourage competition, you charge a lower price. And when you want to quickly move to growth and maturity stage, so if you charge a lower price, you get a bigger market share. Once you get a bigger market share, you can quickly move from growth, sorry, you can quickly move from introduction to growth and maturity stages. So these are the conditions and these are the pricing strategies. So I hope this is clear. Remember that you have to draft the answer here, and once you draft, send me the answer on WhatsApp group. Write this in first paragraph and this in the second paragraph. Okay, and send me the answer drafted one. Take a screenshot and send me in the WhatsApp group, so that I can give you the feedback how your drafting is going on and how you're linking with the scenario. So for joining the WhatsApp group, if you haven't yet joined, make sure you join the group by sending a message on this number below, and I'll send you the link, or you can use the link yourself. Just send me a WhatsApp on this number +923212436266. Let's take a 5-minute break here, and after 5 minutes we will start with another topic that is known as risk and uncertainty. Risk and uncertainty. Okay, friends, welcome back. Okay, what's your question? What would be the price to break even? Uh, this is the price where you will achieve maximum profit. Okay, so just don't get confused by seeing that MC is equal to MR. Actually, that MC and MR is for just one unit where both are same. That is the point you should stop your production, because if the revenue of one additional unit is same to the cost of one additional unit, so that is the point where that one unit is showing a break even, and this is where you should stop your production, and that will be your total maximum optimum units. Because after that, if you continue, so there is a chance that you would end up in a loss. So this is the concept behind that, which is not examined in the paper. So I don't want to go into that details right now, because they never ask you why MC is equal to MR as a profit maximization point. But you are asking me again and again. So I'm just telling you that this is about one unit, one additional unit. When the cost of one additional unit becomes equal to the revenue of one additional unit, this means this is the point that cost and revenue are together, and for that one unit you have reached that break even. So the point is, it is some where you have to stop now your total production, and so this total production is your optimum production, and this is the point where your profit will overall be maximized. We are talking about the overall profit, so just don't focus on that per unit thing. Your total profit will be maximized. So I hope DC this is clear. Okay. Now, and don't get into the details, as I said, you just have to focus on calculations here. Now the next topic that I'm focusing right now is risk and uncertainty. Risky situation is the one in which you have probabilities. Uncertain situation is the one in which you don't have probabilities. There are four type of decision makers: risk seeker, averse, risk neutral, sole loser. In my previous webinar, I uh, did a question where I solved that question by finding out the answer of maximax, maximin, and minimax regret rule and expected values. Uh, Today, I am solving a question in which you are not given with a payoff table, and you need to make the payoff table yourself. So these techniques, expected value and decision rule, are a one that you apply on a profit or a payoff table. Okay, so payoff table is one that you are either given in the paper or you have to make yourself. So in the previous webinar, I did a question where the payoff table was already given. I will just give you the reference of that question as well. So the payoff table was given, and you just had to use the techniques like maximax, maximin, and things like that. Today, the question that I'm solving in front of you is a one in which we will actually prepare a payoff table, and using that table, we will use the techniques. Okay. So there are four type of decision maker: risk seeker, risk averse, risk neutral, and sole loser. So risk seeker is a person that is willing to take risk, and remember, risk seeker use technique maximax, which is a one that says that from the maximum we need to select the maximum. Okay. Risk averse is a person who takes very less amount of risk and follows the technique maximin, which means from the minimums we need to select the maximum. Okay, from the minimum outcomes we need to select the maximum outcome. Risk neutral person is a one who basically uh, goes for the most likely result, and that's why risk neutral follows expected values, because expected value uses probabilities and it gives you the most likely result because there are probabilities in expected value. Sole loser is a person who want to minimize the future regrets. Future regrets. Sole loser. So sole loser basically uses minimax regret rule, which is a technique which says that from the maximum regrets, we need to select the minimum regret. Okay. So now these are the techniques that you apply, and let's move towards a question where we need to prepare a payoff table. So what payoff means, let me give you few things to understand here. Payoff is a return of your actions. You study, you pass. Pass is a payoff. You don't study, you fail. Fail is a payoff. You make investment, you earn profit. Profit is a payoff. You make investment, you incur a loss. Loss is a payoff. So payoff is what? Returns of your actions, returns of your decisions. So that is a payoff. Okay. So payoff table is prepared by two major components. One is known as decision alternative. Okay. And second is known as state of nature. So today I will be focusing more on payoff table, not on the techniques, because for techniques you can watch my previous sessions as well. But today my focus is more towards this payoff table. So decision alternative is what? Decision alternative means options. These are the options that are available to the decision maker. So decision alternatives are the options available to the decision maker. And DA, decision alternatives, we call this DA. DA are the options that are available to the decision maker, which means these are in the decision maker control. These are in the decision maker's control. Okay. So DA is something that is in the control of the decision maker. Now you need to keep this in your mind that something that is in the control of a decision maker, something that is in the control of a decision maker is known as decision alternative. Okay. Now what is state of nature? Something which is not in control of a decision maker is a state of nature. So when certain things that are not in your control, like for example, what demand in the future will be, do we control demand? The answer is no, we can't control the demand. So if we can't control the demand, so demand is state of nature. So when you can't control anything, so that is known as state of nature. So to prepare a payoff table, you need to remember that in a question, you need to find out two things. Payoff table, sorry, I beg your pardon. In a question, you need to find out two things: decision alternative and state of nature. If you are able to find out decision alternative and state of nature, you can make a payoff table, prepare a payoff table. So guys, tell me, something that is in your control is what? Decision alternative. Something that is not in your control is what? State of nature. Got it? So to make a payoff table, these two things are important. Now, a very simple way to find out what is DA in the paper and what is sun, other than this control point. So a simple way to find out is what, is probabilities. So probabilities are given for state of nature. Probabilities are given for state of nature. Why? Because probability is what? Chances of occurring an event. So when something is not in your control and you can't take decision of that, so for that you need probabilities. For that, you need to know what are the chances of certain thing. So remember, the $1,000,000 point is when you are given with probabilities in a question, there is a high chance that particular thing, that particular thing is what? State of nature. Friends, are you with me? Say yes or no. Can people hear my voice? And something that is in your control is decision alternative. So let's start the search to find out what is DA and what is Sun through a past paper question, and let's learn how to make a payoff table. Are you all ready? Okay, so let's start with a question. Cement company. Now, cement company says construct a payoff table. Normally, payoff in our exam is known as profit, or payoff would be said as a contribution. So you need to make a payoff table, which means you need to calculate profits or contributions or even loss as well. So it's an 8-mark requirement to make a payoff table. Okay. Now, as we are starting reading the question, remember the $1,000,000 thing, and that is in a question, you need to find out what DA is and what state of nature is. DA is something that is in your control. So just look in the question what decision maker can control. What is in the control of decision maker? And then find out what is not in the control of the decision maker. That is state of nature. And another indication to find out state of nature is you will be given probabilities. But here, be cautious, understand each and everything. So let's start reading the question. Cement company is a company specializing in the manufacture of cement. Okay, a product used in building industry. The company has found that when weather conditions are good, when weather conditions are good, the demand the demand for cement increases since more building work is able to take place. Last year, the weather was so good that the demand for cement was so great that cement company was unable to meet the demand. Cement company is now trying to work out, let's underline, cement company is now trying to work out the level of cement production for the coming year. So what cement company is trying to work out is the level of cement production. Level of cement production. Okay. The company doesn't want to miss out on the opportunity to earn large profits by running out of cement again. But it does not want a situation where there is a demand but they don't have the cement. So they don't want themselves to be in a situation where people are asking for the cement but they say, "Oh, sorry, we don't have." This means they have produced less than the demand. However, it does not want to be left with large quantities of the product unsold at the end of the year as well, since it deteriorates quickly and then has to be disposed of. On the other hand, it says that neither we want ourselves to be in a situation where we produce so much and we can't sell because of lower demand. Because if we have produced more and demand is less, so we will be left with the cement and it deteriorates quickly and that has to be disposed of. See, so what they want, they neither want to be left with too much of inventory of cement, nor they want to produce so less that they cannot fulfill the demand. Fulfill the demand. Okay. So let's read further. The company has received the following estimates about the probable weather condition and the corresponding demand levels. So weather good has a chance of 25%, and if it is so, the demand will be 3,50,000 bags. If the weather will be average, the demand, sorry, the probability of that is 45%, and the demand in that case will be 2,80,000 bags. If the weather is poor, the probability of that seems to be 30%, and the demand will be 200,000 bags. Now here you are given with a situation where you are not clear what the weather condition will be, and the demand is dependent upon the weather condition, which means whatever the weather is, the demand will be according to that. So I can say here that demand is dependent upon weather. So whatever the weather is, demand will be that. Okay. Each bag of cement sells for 9 and the cost is 4. If cement is unsold at the end of the year, it has to be disposed of at a cost of 0.5 per bag. Cement company has decided to produce. Now, this is a very crucial paragraph. Cement company has decided to produce at one of the three levels of production. Okay, has decided to produce at one of the three levels of production to match forecast demand. It now has to decide which level of cement production to select. Now, friends, you need to find out here you need to find out what DA is and what state of nature is. I'm giving you a quick 1 minute here, and you just write in the chat box what you think DA here is and what sun is, so that I get to know your concepts. Your time starts now. Okay, so I have received a few answers here, and they say that demand is decision, weather is okay. There are a lot of answers here. Now, what is DA here and what is sun? So let's start with sun. Now I can say sun is weather, as you cannot control weather. So weather is sun, outside your control, and also the probabilities are attached with weather as well. So it gives a further evidence that weather is sun. Okay. Now the question is what demand is. So demand is also dependent on weather. So indirectly, demand is also state of nature because whatever the weather is, demand will be according to that. So this means that if weather is something that is not in your control and if demand is dependent on the weather, so this means indirectly you cannot control the demand as well. You don't know whether 3,50,000 or 280 or 200,000 bags will be sold. So this means that demand is indirectly state of nature as well because demand is dependent upon weather. So yes, if weather is uncontrollable, hence demand is uncontrollable. So you can say demand is also a state of nature indirectly. And you can use these probabilities for demand as well because demand is dependent on weather. Now what sun demand is sun, okay? Now what is DA? DA is what? DA is the production levels. Production level is something that is in the control of the decision maker. How many units to produce is in the control of the decision maker. But the question is that how many production levels do we have between which they will decide? How many production levels they have between which they have to decide? So the question said that they will match the production with the demand. They will match. Now, what matching means? That is, if demand is 3,50,000, so one option they have to match is they make 350,000 bags, produce 350,000 bags. If demand is 280,000, so the other option they have is to produce 280,000 bags. This is how you can match the production levels with demand. If demand is 200,000 bags, so you can produce 200,000 bags, and this is the third production level. So this means there are three production levels if you want to match the production levels with the demand. So if there are three levels of demand, so there will be three levels of production as well. Because the question mentioned here that they wanted to match the level of production with the demand. So if there are three levels of demand, so there will be three levels of production as well. Common sense. Okay, friends. So yes, the DA is production levels and there will be three production levels, same as the three demand levels because they asked us to match. So three production levels, what? Either will produce 3,50,000, either will produce 2,80,000, either will produce 200,000. So these are the three levels and the decision maker has to decide whether they want to make 350 or 280 or 200. So we have a question from Iraj Fatma. She says, isn't demand always sun? Yeah, in lot of situations it is, yes, because this is outside your control, but still I would recommend thoroughly read a question. Thoroughly read a question. Now, guys, let's move towards a spreadsheet solution again, and let's have a look that if this is done on a spreadsheet, how we will handle this on a spreadsheet. So to understand how we'll handle this on a spreadsheet, it's time to move towards spreadsheet now. And let's prepare on a spreadsheet. You do remember yesterday on the group I did shared the spreadsheet answer of the yesterday's question. Today again, I'll save this and will send you the spreadsheet answer on the WhatsApp group again. So now I will exactly show you how to work out the figures. My focus right now is on the payoff table. The rest, I assume that you know how to work out the decision rules, that I will quickly tell you the answers, but my explanation will focus here. So I'm making a payoff table for the first part. Okay. Now the first thing to identify is decision alternative. So decision alternative is what? Three levels of production which are same as the demand. What is state of nature? Again, three demand possibilities. So what are we required to do? 3 multiplied by 3 means how many outcomes do you have here? 9 outcomes. So your table will show 9 outcomes. 3 threes are 9. Okay. Okay. So a payoff table looks like this. It all depends where you show decision alternative and where you show state of nature. It's up to you completely. But right now I am showing decision alternative in column. And what is decision alternative here? The production levels. So either we can produce 350,000 bags, or we can produce 280,000 bags, or we can produce 200,000 bags, because we need to match. Okay, so if you are required to match, so in that case, friends, you must keep that in your mind, that whatever the demand is, similar will be your production level. So now it's time to write the demand here in rows. Either the demand would be 350,000 bags, either it would be 280,000 bags, either it would be 200,000 bags. So this is state of nature. Now, if I just give this a look of a table and just draw certain lines for you people, so it looks like a table. And yeah, if I just zoom in a bit here, so that makes more sense now. And you can see 9 boxes coming in front of you. As I mentioned, 9 outcomes, so there are 9 boxes, as you can see. So these are 9 possibilities, 9 profit figures you need to work out. So let's work out 9 profit figures. Okay, so let's do calculation one by one. I hope this is clear to all of you. 3 demand possibilities are these, and they want to match these with the production. So same will be for production as well. Now it's a common sense thing that will come into play. There are 9 workings I need to do. So I'm just giving the numbers for you here. I can use my pen here. So yeah, working 1, working 2, working 3. Let's do the workings vertically. So you start with the first DA, and this DA is 350,000. So you start with the first DA. Okay, you start with the first DA, and that is 350,000. And for this DA, let's calculate 3 possibilities of profit. So let's give the reference of 1, 2, and 3. Now revenue, I need, what else I need? I need cost here, okay? And I need disposal cost here as well, if you remember, and I will get profits. So guys, are we ready for calculation of profits here? Yes, we are. So let's start the discussion. And you just quickly reply me, okay? Now you need to be very fast in the chat box. You need to reply very fast in the chat box, okay? So be with me, guys. Tell me if you, now decision of production will be taken before you get to know the demand. So it's the decision that you have to take first. Now tell me, if you produce 3,50,000 units and the demand is 3,50,000, so will you be able to sell what all you have produced? Come on, I need now answers, okay? I can't see your faces. I need your answers to ensure you are getting my point. So if you produce 3,50,000 units and the demand is 3,50,000, so will you be left with any amount of units? No, which means your sales will be 3,50,000 multiplied by the selling price. What is the selling price? Can anyone help me here? What is the selling price? It's 9, I think, right? It's 9. All production sold. Okay. Now, if you produce 3,50,000 units, as I mentioned here, if you produce 3,50,000 units, so your cost will be on your production units. Yes or no? Yes, your cost will be on production units. So 350 multiplied by 4. And make sure you give a minus sign here to write this in negative terms. Okay, so any disposal here? No, because what all you produced 350, you sold that, so there is nothing left. So guys, let's work out the profit. Let's apply the sum formula. So profit is 1750, and I'm quickly just giving the reference. Great. Understood, friends? Understand the technique that I'm using. Okay, moving forward quickly. Now, if you produce 3,50,000 again, and the demand turned up 2,80,000, you produce 350 and demand came to 80. Come on, tell me, how will you be, sorry, how many units you will sell then? If you produce 350 and the demand turned up to 80, so you can sell how many units? You can sell max 280. Why? Because demand is 280. You produce 350, but you sold 280 because of the demand. So your revenue will be booked on 280. Okay? 280. So you produce 350, you sold 280. So how many units are unsold? Your unsold are 70. Okay? 70. So what you will charge here as a cost. Now this is crucial. Let's see how many students reply here. Your cost will be based on 350 or 280. Your cost will be based on 350 or 280. Yeah, this is the confusion I'm talking about. Come on, give me your answers. Your cost will be based on 350 or 280. There are certain students who are writing 280. Majority is going for 350. And this is the point where concept is lacking. See, this is experience. I knew people would be saying wrong answers here. So the cost will be charged for 350. Why? Why? Because the decision to produce will be taken before you get to know what the demand is. Yes, this is what you are learning. This is what the decision making is. You have to decide first. This is what risk and uncertainty means. You are taking a risk, and the risk is you are producing 350. You don't know what the demand will be. Yes, yes, friends. So I hope this is clear that the decision to produce will be taken first, and then you get to know what the demand will be. So your cost will be booked at 350. Now you made 350, but you sold 280. How much you are left with? 70. 70 is disposal cost, and this is a cost, mind you. So show this in negative terms. This is a cost. Can anyone of you help me here? What is the disposal cost here? So the disposal cost is 0.5. Thank you. It's 0.5. And let's apply the sum formula. And the answer is 1085. Just give the reference of the cell. And this is 1085. So, this is the most confusing part, where people ignore the fact that if you have sold 280, so your cost is not compulsory on 280, because you have to take a decision before you know what the demand is in the future. This means if you are taking a risk to produce 350, so your cost will be at 350, and you are not sure whether you will be able to sell 350 completely or not. Wow, this is what you have to understand, my friends. Are you all with me? Loving the way I'm explaining here? Give your feedbacks. Now, let's move on. If you produce 350 and the demand turned up 200, now what? Now what? The demand turned up 200. Nothing. How much you will be able to sell? 200 at the rate 9. You will just sell 200 because demand is 200. But what about cost? Come on. What about cost? Cost will be based on 350 or 200. I need answers. Everybody reply, please. So the cost will be on the basis of 350. Yes, 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 yes. Loving this. You are getting my point, because the decision to produce has been taken well before you know the demand. Any disposals to be made? Yeah. 350 you produced, 200 you sold. So 150 into zero point 0.5 is what you need to dispose of. 75 is the disposal cost. 325 is the profit. And this is what I've linked here. And that's it. Getting my point, my friends? We all need to pass in March 2020. Are you with me? Are you following my plan of $1,000,000 that I give you at the day end? Are you watching the previous webinar videos? Come on, tell me yes or no. Are you watching those videos and doing the new practice questions? For all the practice questions that I gave you, I'll share the video answers with you people, okay? Are you happy? We'll share the video answers with you for all the homework questions. Come on, happy or not? Once we are done with the webinar, I will share the video answers with you people. And I won't charge anything, okay? So that's the best part. Now we are done here. Let's move on to the next working. 4, 5, 6. Now let's see what happens. If you produce 280,000, if you produce 280,000, so if demand is 350, how much you will be able to sell? Guys, come on, reply. If you produce 280,000 and the demand turned up 350. So you can sell how many? 280. 280. Why? Because the demand is more than the production. Yes, you can't sell more than 280. So now the revenue is depending on the production quantity. Okay, so you made 280, you can sell 280 only. So your cost will be on the basis of again 280, right? Yeah, you made 280. Any dispose of? Nothing. Because whatever you produce, you sold out. You made 280, you sold out 280. Are you clear? Okay, okay. Now friends, let's consider the possibility. You made 280 and the demand is 280. Wow, demand is 280. So how much you will sell? How much you will sell? Tell me. You will sell 280. So you don't have to do the working again. It's the same working that you will use. This is the best part of using the method that I told you. So you sold 280, you produced 280, and you are left with nothing as a stock. Your profit is 1400. So it's the similar situation, which means for working number 4, I will use the same figure. For working number 5, I will use the same figure. So 4 and 5 done together. Understood, friends? I hope you should. Okay, so this is the best thing about working like this. Now I'm moving towards another area here, and let's see what happens and what are we required to do. So friends, it's time to move towards the next area, which deals here and says 2,80,000 units you have produced and the demand is 200,000. Now tell me guys, how much units you produced? 280, right? So your cost is on the basis of 280. Yes. But how many you will sell now? You will sell 200. Okay. You'll sell 200. So you will be left with how much? As you made 280, you sold 200. So you left with 80. So what has to be done for 80? Dispose of. What is the cost of disposal? zero point 0.5. Let's apply the sum formula. It's 640, the profit that I'm getting here. And this is what I'm doing for 8 marks on a spreadsheet. Loving, guys? Now the last one is for you people. Quickly tell me the profits for the last 3 possibilities. Everybody, are you with me? Shamir, thank you. If you like my technique and if this made your life easier. Okay, friends, now let's move towards the third. If you produce 200,000, okay, if you produce 200,000 and the demand is 350, wow. If you produce 200,000 and demand is 350, so how much will you sell? Come on, how much will you sell? Max 200 into 9 into 9. Okay. And your cost will be based on 200 because you produce how much? 200. So cost will be on 200. Any disposals to be made here? No, because whatever you produced 200, you sold that. Applying the sum formula, the profit is 1000. Done with the seventh calculation? Yes. Now, the eighth calculation, if you produce 200 and the demand is 280, well, it's the same thing. It's the same thing that you will just sell 200 because demand is 280 and you produce 200. So the cost is on 200 and the profit is 1000. Is it isn't the same thing, guys? Yes, it's the same thing. So nothing to work out and just give the reference. Wow. Last comes if the demand, if the production is 200 and the demand is 200,000, so it's the same demand as what you produce. So you produce 200, the cost is on 200, you will sell 200, so the revenue is on 200, no disposals, same profit. So what I have to do is I just need to link here. That's it. Guys, are you all with me? Enjoying the session? So yes, all three are same, which means working 7, 8, and 9 are a one that you did together. This is the best way to deal such a question. That is why I tell my students always, every time, that you start with DA, calculate all the possible outcomes for DA, and then move to the next DA. And this is how you save your working. So I start with the first DA, as I did here. I started with the first DA, then completed all the workings, then moved to the second, completed all the workings, moved to the third, completed all the workings. And if you do so like this, you will see lot of time saving things will happen, as you just saw here, the time saving, because there were certain calculations that you were not required to do. So 9 calculations, 9 profit table answer. Yes, you have to show the formula workings. Yes, Shamir, yes, you have to show. Examiner will check like this. See, examiner will check like this. You have to show, my friend. Never use calculator and do the working like this. So we are done with this part and we have secured very good 8 marks from this question. I hope you feel good here. So are we clear on this, everyone? Guys, happy? So if you are happy here, then it's time to move on to the next part and see what it says. Decide the level of cement production. Decide the level of cement production that the company should choose based on the following decision rules. Okay, so the decision rule one is maximax, maximax, maximin, and expected value. And along with that, it says you must justify your decision under each rule, showing all the necessary calculations. Okay, so friends, maximax, maximin, minimax regret rule. So if I just take help of my slide here, so this is maximax, maximin. Now, starting first from maximin, so what it means? It means that from minimum payoffs, select maximum one. See, from minimum payoffs, select maximum one. So you have to read like this: from minimum payoffs, select maximum one. So let's go to our workings and see what payoffs do we have found out here for our calculation purpose. Now let's apply the rule maximin. Okay, so you have to take a decision. Okay, and definitely you take a decision for something that is in your control, and that is what? DA, right? So you take a decision for DA. So let's see. If I start with DA1, DA1 is in 350, DA2 is 280, DA3 is 200. Okay, now in 350, in 350, which you think in 350, which you think is the highest, sorry, maximin, which you think is the minimum one, which you think is the minimum one? 325. Okay, so it's 325. Now in 280, which is the minimum one? It's 640. So 640. See how easily I'm using the technology and explaining you the things. Then in 200 DA, what is the minimum one? So it's 1000. In all the three, it's 1000. Okay. So what are we supposed to do? From the minimum payoffs, we have selected all the minimum ones. Got it? We selected all the minimum ones. From all the minimum, select the maximum one. Select the maximum one. So the maximum is 200 and the decision is 200. This means how much level of production will be done. So level of production is 200. Getting my point? Are we done with maximin, guys? I'm sure we have. Is no issue. Now coming towards maximax, and let's see for the 3 DAs what maximax has to say. Okay, from the list of maximums, maximum payoffs, from the list of maximum payoffs, select maximum one. Select maximum one. So from maximum payoffs, okay, from maximum payoffs, we need to select what? We need to select maximum one. Are you getting my point, friends? I hope you are. Okay, so the maximum payoffs are what, guys? Let's do the working. Now, can you tell me here for 350, for 350, what is the maximum one? 1750. For 280, what is the maximum one? 1400. And for 200,000, what is the maximum one? 1000. So 1750, 1400, 1000. So now let's do the selection from the list of maximums. These all are maximums. From the list of maximums, select the maximum one, and that is, this means the level of production will be how much? 350. Agreed? Okay. So we are done with this one as well. Now let's hide these right now for the time being. I'll give you the spreadsheet answers, but I've just hide it here. Now guys, the third technique is expected value. So we have selected here from minimums, we have selected maximum. Okay. From minimums, we have selected maximum. Here from maximum, we have selected maximum. And then comes the expected value. Expected value. Now for expected value, we need what? We need probabilities. Yes, we do need probabilities for expected value. So are we clear about the probabilities here, guys? Yes, we know we are given with the probabilities. So what are the probabilities here? We need to work out the expected value for three decision alternatives, 3 DA. First, EV will work out for 350,000. Then we'll work out for 280,000. I'm talking about production levels, okay? Then we'll work out for 200,000. So these are your DAs for which you are doing the calculations, okay? Clear? Now, are you given with the probabilities here? Yes, we do have probabilities here. That is 25, 45, and 30%. So let's write the probabilities here. It's 25, 45, and the sum of the probabilities equals to 1. You all know that, right? So let's apply the expected value formula and let's do the calculation. So I'm doing the calculation in one cell. So just look at the calculation. 1750, profit having a probability of 0.25, bracket close, plus 1085, profit having a probability of 0.45, bracket close, plus 325 having a probability of 0.3, bracket close. So you can see here, you will be using all these figures here. Probability multiplied by this, probability multiplied by this, probability multiplied by this, and the sum is expected value, which is 1023. 1023. Similar calculation will be performing for this one. 0.25 multiplied by 1400, 0.45 multiplied by 1400, 0.3 multiplied by 640, 1172. Getting the point, guys? So here 1400 multiplied by 0.25, 1400 multiplied by 0.45, 640 multiplied by 30. You add all, you get expected value. And the last one is simple, 1000 will be the answer because the outcomes for all the three are 1000. So 1000 multiplied by 0.25 plus 1000 multiplied by 0.45 plus 1000 multiplied by 0.3 is 1000. Now you select the highest EV here. So the highest EV is coming here. Okay. The highest EV is coming here. So this is the answer. So this means the production level will be how much? Production level will be 2,80,000. Now guys, I've done the solution for you people. I'm just now discussing the theoretical part because theory is important and sometimes not covering theory kills a student. So let's quickly see what you have to do here for theory. You must justify your decision under each rule showing all necessary calculations. Okay. Now what calculations will you show here? The one that I've shown in front of you. Okay. And now you need to justify. So I'm just writing one sample answer to tell you how you need to justify here. Okay. So I'm doing the answer for Maxi Max here. So let's see what you'll write here. So you'll write to justify. Okay. So now you'll write if decision maker is risk taker. You should know that is a one who risk taker is the one who wants to take the risk. So if decision maker is risk taker, then he will use maxi max technique using, you have to write here in a word format. Okay, you will be given a word processing sheet here. Using this technique, he will select the maximum profit from all available maximum payoffs. Do you know this? Yes, you should know this. Payoffs. So here the maximum profit will be 1750 if he decides to produce two 350 bags based on Maxi Max. So this is what you have to write. See, understood, friends? This is what you have to write. This is what you have to write. This is how you have to write. So I hope you can just write the answer for maxi min and for expected value as well. Remember, friends, remember that in risk and uncertainty, you need to keep this in your mind. That is, risk seeker uses maximex, okay? Because risk seeker wants to take risk. That's why it goes for the maximum profit. Risk averse uses maximin because risk averse is a person who does not want to take too much risk. So that's why he considers the minimum options, the worst options, and from those worst options selects the best one, as we did in the calculation. Okay, as we did in the calculation, from worst he selects the best one. Okay, then comes the risk minimax regret rule used by sole loser. Now for minimax regret rule, you need to prepare a regret table. You need to prepare a regret table. So from that regret table, you will find out the maximum regrets, and from those you will select the minimum one. So from the regret table that you need to produce here, you will find out the maximum regrets and you will select the minimum one. For this, you have to watch my previous webinar video. I will just share right now. The Milo company is the question name, where I've done a detailed calculation on minimax regret rule, because in that question we didn't discuss about payoff table that we did right now. Okay, so I just want to use best time in my webinar so that you can cover each and everything through the entire videos of 2 sessions or the 3 sessions that I've taken before. And Expected value is used by risk neutral decision maker because risk neutral decision maker goes for the most likely result, and expected value uses probabilities. So probabilities basically are used in expected value, and that results in the most likely outcome. So that is what your risk neutral does. So these are the four decision makers who will use four types of techniques as I mentioned here. I hope this is clear to all of you. Now the writing part would be on word processing sheet and the calculation part would be on Excel. So you have seen your papers. If not, just go to the specimen. For all the writing part, you have next requirements, different requirements, so that you don't get confused. So my friends, I hope this is clear to all of you, the workings that I've done in front of you. This was all risk and uncertainty about, and these are the other techniques of dealing with risk uncertainty like sensitivity analysis. This is also I've covered in the previous webinar, so you can watch that. Simulation and decision trees. So guys, now we are at next section of variances and budgets, budgeting and control. So right now, as we are left with few minutes, so I'm not starting this section. Rather than I am going towards another small concept that I want to discuss with you people right now, because that comes a lot these days in your examination. So I just want to give you a quick idea about that concept because it will help you. And that concept is of three E's, which is tested a lot these days. And then I will move towards section A OT questions as well, so that we can quickly use our remaining time on that. So uh, let's now discuss the concept of three E's, which is tested a lot in your examination these days. Now, for not-for-profit organizations, we use now if we need to measure the performance of not-for-profit organization, okay? So if you want to measure the performance of not-for-profit organization, so you have to use three E's. Now, three E's is also called value for money. Okay, we also call this as value for money. So value for money is known as three E's: economy, efficiency, and effectiveness. Let me give you quick examples before I move towards my OT questions. What is economy? Now economy is an input measure. So what you can say for input, so the resources that organization inputs is the input resources. So it says that uh, it measures whether resources used are the cheapest for the required quality. So economy says that whatever input you are doing in form of your resource, so that input should be the cheapest input for the required quality. So for a hospital, doctor is a resource. So what you would say, that there should be a low cost per doctor. For an institution, you would say there should be a low cost per teacher. So teacher is an input resource, doctor is an input resource. So economy says that whatever your input is, it should be a lowest possible input for the required quality. Then comes efficiency. What is efficiency? So this completely deals with input. Okay, so what is efficiency? Efficiency is input to output measure. This is input to output measure. Okay, it says that whatever your input is, from your given input, the output should be maximum. From your given input, the output should be maximum. So it says that whatever input you have done, the output should be maximum, which means if I give you example of a of a institution here, school. So I would say that number of students taught by the teacher. Now, number of students taught by the teacher. So students taught by the teacher is efficiency measure, because here you see input is the teacher and student is the output. So you are seeing here input to output relationship, that how many students teacher taught. So any measure that you make for efficiency, any measure that you make for efficiency, remember it should have both the things. That is, it should have input as well as output. Like I just showed you, number of student is output, taught by the teacher is input. So any efficiency measure should show both the things. But economy measure will show input, like cost per doctor. So number of patients seen by the doctor, number of patients seen by the doctor is again what? Efficiency. That how many patients doctor have seen. So this is efficiency. Then comes effectiveness. It says that whatever your outcome is, whatever your output is, it should be objective oriented. Your outcome should be objective oriented, which means whatever your outcome is, it should fulfill your objective. It should fulfill your objective, whatever your outcome is. So it should fulfill your objective. So this is what you mean to say by uh, effectiveness. Okay, now let me give you a quick example of effectiveness here. So I would be saying here for effectiveness, the student passing ratio. Now student passing ratio is what? It's effectiveness. Percentage student passing ratio is what? First, for student, uh, the passing ratio is important. Okay, so remember that uh, passing ratio, a high passing ratio is basically what? It's the effectiveness. Now if I give you example of the hospital, so what I would say here, for hospital, number of successful operations performed by the doctor, number of successful operations performed by the doctor is known as effectiveness. Okay, so effectiveness deals with the outcome that is objective oriented. Now let's quickly move towards certain questions and see how OTs will be solved in the paper. So let's quickly look at certain OTs and let's see what we have to solve here. So last 6 minutes we will be spending on the OTs, and please just have a look here. Let's see what OTs has to say about. I've covered economy of effectiveness, so I hope this is clear. Input measure is economy, input to output is efficiency, and effectiveness is objective oriented. Now let's quickly solve. Come on guys, give your answers. A government is trying to assess schools by using a range of financial and non-financial factors. By a range of financial and non-financial factors. One of the chosen method is the percentage of students passing. Percentage of student passing 5 exams or more. What is this? Which of the three E's it is? Come on, tell me. Economy, efficiency, effectiveness. I need answers from all of you. This is effectiveness. Percentage of student passing 5 exams or more is effectiveness. It is showing the final outcome, the objective. Yes, is effectiveness. Great. Let's move on. DEFCO provides accounting services to government departments. On average, each staff member works 6 chargeable hours per day, with the rest of their working day being spent on non-chargeable administrative work. Once the company's main objective is to produce high level of quality and customer satisfaction, the company has set its target for the next year as follows. So let's see what targets are. Cutting departmental expenditure by 5%. Okay, cutting departmental expenditure by 5%. Second, increasing the number of chargeable hours handled by advisor to 6.2 per day. Obtaining a score of 4.7 or above on customer satisfaction. Tell me, guys, the options. Come on, tell me the answers. Okay, so the first is what? First is what? First is economy. First is economy. What is second? You can see number of chargeable hours handled by the advisors. So you can see both here. The output, that is the, and the input. So it's efficiency. Third, a score of 4.7 or above. Effectiveness. So the correct answer is D. First is economy, second is efficiency, third is effectiveness. Are we clear? Okay. Now the next one. Now the next one we have is a jewelry company makes rings and necklaces. The resource available to the company have been analyzed and the two constraints have identified. Labor time and machine time are the limiting factor. The management accountant has used linear programming to determine that R is 500 and N is 400. Now, these are what? These are your answers, right? Yeah, these are the answers. Now, quickly solve and tell me which of the following is or are slack. Slack is the underutilization I mentioned today. Slack is the underutilization. Can you give me the answer here? Okay, so what you need to do, it's a very quick, fast calculation I'll perform. And what the calculation will be here? It's a simple calculation. So, labor. So, what are we supposed to do? 3. How many units we have produced? 500 plus 2. How many? N. 400. So, can any one of you tell me what is the answer of this? It's 2300 hours. 2300 hours. Okay. And how many hours do we have? 2400 hours. So the required are 23 and available are 24. Is this slack? Is this slack? Yes, this is slack. Your hours required are less than available. This means you are not completely using the hours. This is slack. Okay. For machine, 0.5 into 500 plus 0.4 into 400. Come on, can anyone tell me the answer here? It's 410 hours. How many do we have? 410 we have. So it's 100% utilization. This is 100% utilization, okay? So there is no underutilization. So this is slack and this is not slack. When there is no slack, remember, when there is 100% utilization, remember, this is where you work out shadow price. This is where you work out what? Shadow price. So there is a slack. And where is slack? Slack is at labor. Labor time is the slack. Agreed, guys? Now comes the last question for today. The fruit company currently grows fruit which customers pick themselves from the field before paying. Okay. Company is concerned that a large number of customers are eating some of the fruit while picking it and are therefore not paying for it at all. Wow. Customer pick the fruit and eat it. They don't pay for it. As a result, it has to decide whether to hire staff to pick and package the fruit instead. They have to take a decision here. The following values and costs have been identified. They have to decide whether to employ new staff for picking or not. So, which of the above are relevant to the decision? Let's see what are relevant here. Number one, the total sales value of the fruit currently picked and paid for the customer. Do you think this is relevant for this decision making? So the answer is yes. You need to see that how many are paid fruits. How many are paid fruits? You have to look here. Then the cost of growing the fruit. Is this a relevant cost for this decision? Is this a relevant cost for this decision? No. This is a committed cost or a sunk cost that you already incur. It has nothing to do with this decision. The growing of fruits has nothing to do with this decision, the decision whether you have to employ new staff. Then the cost of hiring staff. Yes, definitely. Definitely. The cost of hiring staff. The total sales value of the fruit if it is picked and packed by the staff instead. Yes, definitely. Definitely. So the sales value currently for the fruits that are picked by customer is relevant. The sales value when the staff will pick and the cost of the staff. So the answer is 1, 3 and 4 are the relevant cost. D is the answer. Getting my point, guys? So I hope this is clear. OTs that I'm doing here. And this is all for the today's session. But before we end, you know what is important to show you. So the thing that I want to show you here is the most important thing, and that is day three's plan. So remember, this plan is important. Now for pricing, you can do further question here. For risk study, this is the further question, and one question I'm writing here. Milo company, and I did this in the last webinar of December 2019. I just missed it here mistakenly. You will find this in the previous webinar on day 3. Day 3, you will find Milo company for the practice of minimax regret rule. Okay, minimax regret rule. The rest we will discuss tomorrow. So I hope today's session went well. Please just send me the WhatsApp on this number if you haven't, as I will be sharing the spreadsheet answer. Along with that, we'll be giving you more OT questions for solving. More OT questions, yes. So I'll be giving you more OT questions. Just join this group through this link or just send me the WhatsApp. Thank you very much for the today's session. How the session went today, please a quick feedback. Can you give me a quick feedback? Did the today's session went well? Yes or no? Come on. Did you learn the new techniques, guys? Tell me. Yes or no? Need feedback from everyone. Yes, guys. Okay. So I hope the webinar is going good for you. Yes. Thank you very much for the feedback. See you tomorrow. Until then, take care. Bye.